Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here as the Chief Executive Officer of Treasury Consulting LLP, and today we are going to speak about the topic which is known as which is a technical analysis on the New Zealand dollar. As you very well understand that the world is predominantly divided into three commodity currencies, which are also known as antipodians, which is Aussie dollar, Australian dollar to dollar, shortly known as Aussie dollar, New Zealand dollar to dollar, shortly known as New Zealand dollar, and dollar to Canadian dollar. So for former two currency, dollar, Australian dollar to dollar, and New Zealand dollar to dollar are also the direct pairs across the globe. The direct pair means that they are quoting dollars. So sitting today, one Aussie dollar is approximately 0.76. So if you have 100 Aussie, you have approximately $76. On the other hand, city today, one New Zealand dollar is approximately 0.72. So if you have 100 New Z, then you have approximately 72 or 73, 72 to 73 dollars. But at the same time, we need to understand few important concepts very carefully in the sense like when it comes to New Zealand dollar. And before take you there, I would like to summarize you a few important facts about these commodities currencies and the behavior of these commodities currency. We should appreciate one fact very carefully, that these commodity currency always move in tandem. In tandem means they move together. On the other hand, the nature of the two of the commodity currencies are same. On the other hand, one of the commodity currency is not same. So the nature of dollar to nature of Aussie dollar and Canadian dollar is same, because of course they both are the exporters of huge minerals, platinum, diamond, iron ore, coal, and all these. On the other hand, the nature of New Zealand dollar is little different, and it is more of a perishable goods, right? But certainly look at these into consideration, and if you look at that, you will get to know, even though the nature of the New Zealand dollar is little different than, not little, more different than so-called American dollar, little different than Aussie dollar and Canadian dollar, they move in tandem, which we can very well clearly see from any of the charts. Like look at here. If you have this chart right in front, first of all, before moving to this chart, let me summarize you that we are calculating this chart using three techniques. And every time whenever we we'll move, we try and calculate the chart using any of the we try and put a new technique into consideration. And over the period of the time, we are expecting to have more than 100 technical analysis indicators in place on our YouTube channel. Now if you look at here, now this video is covering three: RVI, Relative Volatility Index, this video covering HV, Historical Volatility, and this video is covering your momentum investing. We already had a word about RVI, which is Relative Volatility Index. It is not taking an absolute value into consideration, rather it is taking a relative value, which is your percentage, right? And your historical volatility suggests that how much volatile the New Zealand dollar is. Of course it is, we cannot disagree with this statement. The reason is pretty clear and absolutely simple, because New Zealand dollar is a currency which was always a volatile currency, in the sense like, although the business model of the New Zealand dollar totally differs than the business model of Aussie and all. The reason is very simple, because they are more into the perishable goods and they are more into this hard commodity goods. But we fully understand that somewhere in September 2015, the world has faced a commodity crash, when commodity prices just fallen. That is, and here we go. Here is an example of this fact. Before that, the New Zealand dollar was trading at approximately 0.74, and it went down to 0.62. I still remember I was there at that point of time in the EXL as a corporate treasurer, and a lot of people talked about whether New Zealand dollar is a sell call or a buy call. I was consistently maintaining that New Zealand dollar is a buy call. Of course, the sentiment would happen, and when the commodity price were fallen, of course the sentiment would happen. Like we can clearly see that. Now these are the little fake signals that we need to test and we need to see. However, people tend to disagree with this, but we seriously need to consider these fake signals. Now here it was neither a buy neither a sell. That point which I am mentioning here, it was neither a buy neither a sell as per the relative volatility index. But after that, New Zealand dollar went higher and it went to approximately 0.70, which is 8 big figures, because one big figure is 100 basis point. So sitting today, if New Zealand dollar is 0.72, which is it is trading, and if it will move to 0.73, it means the change of one big figure. And if it will move to 0.71, it means the change of the one big figure. First on the positive side, one on the negative, later on the negative side. So New Zealand dollar is also a story of the mean reverting. It went up, went down, went up, went down, and we have taken relative volatility index to only to tell you that sitting today, New Zealand dollar is neither a buy and neither a sell, like right up front here. New Zealand dollar is neither a buy neither a sell, because we are maintaining a range of 20 to 80, and relative volatility index is clearly suggesting that it is neither a buy call or it is somewhere 57, 58. It is neither a buy call or neither a sell call. But my former opinion towards besides this technical analysis, that now commodities are a little bit picking up. Oil has started moving up. I think oil is trading at 52 now, and of course there is a little dispute between Russia and other nations regarding the cutoff, cutoff in the valuation, cutoff in the production of oil. But nonetheless, even in that regards, I tend to feel that commodity pricing will move up. Certainly one factor which we need to consider, and it's one factor which we cannot disagree and dishonest, is China. China is nowadays taking very less commodities into consideration, so the import is pretty less nowadays, and I certainly don't think that China would be able to pick up that. And we can very well see from here that the relative volatility in this New Zealand dollar, although it is a perishable I would say it's a perishable commodity, is approximately 16%. So every month New Zealand dollar is maintaining a volatility of 16%, which is very high, I would say. And if you look at this chart, this chart is showing the sell-off in the New Zealand dollar from here when it was 0.73. I certainly don't think that I think 0.72 is not a buy call, and 0.7450 is a little bit sell call in New Zealand dollar for traders. At the same time, traders should completely agree with the fact that which all derivative instrument they are using. Like for example, if they have a portfolio of the New Zealand dollar, are they maintaining options? They're maintaining forwards, or they are keeping interest rate swaps, which way they are going, or if they are maintaining options, are they maintaining exotic options, or are they maintaining exotic options or not. So this is something how New Zealand dollar is maintaining, and I think there are little conflicting signals in New Zealand dollar. In my personal opinion, New Zealand dollar is moving towards 0.73, 0.74 as the commodity pricing are moving up. But I might not be completely in agreement of the fact, considering the fact that New Zealand dollar is a little volatile currency, and if there would any dispute which would happen in the price of the oil, although New Zealand dollar has nothing to do with the oil, I would certainly think that prices would fall in New Zealand dollar. You would be able to see the associated impact on New Zealand also. So, and this way, considering the dispute between various governments, especially Russia and US, I certainly don't think that the volatility in these commodities pairs would go. I think that over the next, besides this technical analysis which we are presenting here, I think that New Zealand dollar would be between 0.72 to 0.7350, and I think it is up to your stop loss. Then if you are able to sell at 0.73, it would be nice. It is up to you whether how you are maintaining the stop loss. And I think New Zealand dollar and Australian dollar will also roughly 0.76 to currently 0.7879. I strongly doubt that Australian dollar would go down from here. because of the 30 years carry which they are offering, and 30 years carry is 3.27%. We are ready to make a video about that. And I think Australian carry will continue to support Aussie dollar for a longer tenure of the time, but we cannot take this as granted sitting today. We need to consider that it cannot be taken as granted. So this was all about New Zealand dollar, and we are expecting that CAD to also be in the range of 1.32 to 1.34. I think 1.36 would be a selling call for CAD, but again we need to maintain your stop losses. That how you are maintaining the stop losses, considering the fact that huge volatility is happening in the Chinese yuan, and Chinese yuan is depreciating every day. And of course, Chinese, it is not the market forces, it is the intent of the People Bank of China as well to let yuan depreciate, although they are using the FX reserves in that regards. I strongly think that commodity currencies would continue to maintain a range, and this range might not change immediately, but this range would certainly be volatile, and we would continue to, I think we would continue to face approximately 16 to 20% of the volatility in these currency pairs, and I think Bollinger bands would continue to be in the range of plus minus 2 standard deviation. With this, we would like to thank you and hope to see you soon. You are always welcome to connect with me at rahul.magan@triciconsulting.in, and our alternate email IDs is info@triciconsulting.in. You are welcome to visit our website www.triciconsulting.in. With this, we would like to thank you very much and hope to see you soon. This side Rahul from Trici Consulting. Thank you.